Makes sense. Yeah, why not? I mean, I guess they're just getting the bleeding edge of leverage they need, but it's like is what it is. Anyway, so we closed exactly, I think exactly at the market makers expected move, within 1 penny of the market makers expected move for today to the upside. So I guess, the MM still kind of won out in the end, but none of the call sellers did, that's for sure. Tomorrow, looks like a break of 5,800. I mean, I would say a break of 5,800 would probably see test of like 50, based on the positioning we have now. 5820 25 is going to be upside resistance. 5800's got quite a lot of resistance. There's a bunch of bot puts there for this Friday. And I didn't see any like out of the money bullish positioning come in above 5,800. There are bot puts at 75 into close. And so maybe we see this continue to pull back a little bit in after hours. It almost got the test at 58.48. Remember, we're kind of flying blind up here when you guys are looking at the futures chart. I know I have resistance levels, but they're not going to be as accurate, right? Because we've never traded in these ranges before. So give them a little bit of flexibility when you're watching them, but very close to the 58, like 48 test, a little lower. Peaked there, failed. I could see this pulling back to like 58.30, where we traded most of the day, or maybe even 20 in the overnight session. Given where the short puts where the short puts expired. So like the 99, 95, 90, 85, 80, and 75 short puts are what drove the bounce from our low test of the day. So I would say those falling off probably opens up like 35 to 20 to the downside before tomorrow morning. So we can see it slump into PPI or CPI, and then we'll see what happens after CPI. I know analyst forecasts are at like 0.1 to it's like 0.14 to 0.22. I would say we probably end up on the higher side of that, but still maybe sub 0.2. So like maybe like 1.819 is kind of where I'd put it. I'll look at it more tonight, and I'll do like a more in depth write up on CPI expectations for tomorrow. But I don't think there's a lot of bullishness that's going to come off of it. I think largely the CPI expectations for tomorrow are priced in. Um, if it is flat or slightly cooler, that shouldn't do anything. Slightly hotter shouldn't do much. I think the only ranges where we're gonna see like an outsized effect would be if it came in negative, like under 0.1 or above 3. The only outlier there would be core could move up. If core were to move up to 0.3, that might initially present some shock, but I think we'd shake it off into the end of the day. So yeah. So a little bump in dollar value on stronger inflation. That'll improve leverage. That should drive more put selling and vol shorting. And we're also gonna, and I think this is far more important than anything else tomorrow, is that after CPI tomorrow, we're going to start to get event vol falling off. So going into market open tomorrow, event vol is going to be falling off. Some of it will persist through tomorrow into PPI, but not a lot of it, right? And what we should be looking for is that vol shorting that pulled back Monday to reposition. So now that the event vol is gone, to bring that vol down, bulls are going to want to short it, and that's where the bullishness up to like gamma max would come from. So keep an eye on that. If we fail 57.50 or more importantly 57.20 in the pre-market, that's going to spike vol, and we would have a much more bearish reaction. But I don't think we're going to see that. I'm pretty sure we see event vol get shorted out and probably into SLD next week. So like straight bull from, you know, tomorrow mid-afternoon out into like Wednesday next week. Just from the event vol falling off, nothing else. Commodities down again today. Continued drop in oil. It's lost like the 74 level. It seems to just be chopping around there. Agricultural commodities rose a little bit, but industrial metals, precious metals both fell. Probably largely due to the big move up in dollar. Dollar up quite a lot. We got to move up in dollar up to almost at resistance, and pretty close to breaking back above 103, largely on losses in the yen, the euro, and the pound. The yield curve, due to that, is getting very, very close to inversion. I think it's about a 0.05 spread, positive spread right now. It actually inverted a little bit earlier today, and hotter inflation tomorrow, I think, almost guarantees that we see the inversion in the yield curve. Correlation turning around a little bit at the end of the day, but still trending down. This is where we saw that near-dated short vol pull back, and now we're kind of slowly starting to see it get reapplied, but there's still a very potential large move down in correlation should all of that short vol reposition at the money above 57.50, right? So if all of those sold puts that they sold down at like 60, 650, 675 on the failure the other day, if they roll those up into the 5700 range, we're going to see correlation drop pretty hard. And, the dispersion trade in tech is going to get levered up in line with that. Obviously, leverage just cranking. The US 10, JGB 10 synth is almost back to where it was prior to the August correction. It actually has kind of returned to where it was prior to the August correction. We haven't hit the levels we hit at the prior all-time high. Back when leverage was at like 8.4 or whatever, and we haven't hit those all-time highs again. But we have kind of mean reverted back to before the yen kind of squeezed, and we got that flash crash in Nikkei. So the short paper is stable. They're able to maintain the cost to carry, and as that improves with the rising dollar, we're seeing that leverage return out into the long end of the carry trade. However, as they leverage that up and the yield curve inverts more deeply, the demand for vol stays elevated. Remember, everybody went long vol as yields went up after the Fed cut when the spread closed even more. And so all of those bond positions from everybody that was, buying into the bonds on the falling yields bought, they're buying the VIX to hedge that portfolio position, and they're holding those VIX hedges, right? So if yields continue to go up, especially on the back end of the curve, and the yield curve continues to invert, the forward yield of the yield curve, of the spread in the yield curve, is going to decline, and the forward yield of volatility, being like long vol, is going to go up. And if one closes under the other, it tends to, we've talked about this before, but it tends to drive a lot of long interest in vol. And you can get, like back in August when VIX hit 70, we closed above and shit went crazy, right? That's kind of what you can expect when those two things cross over. So that's not here yet, but And it may not be, right? Like the yield curve may modulate and things normalize a little bit without getting a crossover there, and they're able to kick that vol down, right? As we expect them to do, shorting vol after these events roll off. But if they can't get it back down, it can get problematic. Move up, still not in line with correlation, so they're correlation and move not correlated. Generally, you'll see move kind of grind up first, and then you'll see a larger move in correlation later, especially because, you know, one's tracking the short-term vol, one's tracking the 3-month correlation. But this tends to be a little bit of a leading indicator on larger moves or spikes in core 3-month. And so the fact that it's up and core is down and they're inversely correlated right now means that there's quite a lot of pressure building in that trade. And like I said, if they come in short vol, they can resolve that pressure. So, you know, it's not like necessarily like, oh, the market's going to crash. It's like there's a risk there that correlation could rocket up, but only if they don't short vol following the CPI PPI prints. Skews kind of just chopping around. It's not really spiking up. It's still very elevated historically, but it's not going crazy or hitting new all-time highs or anything. 50.99% of the S&P above its 90-day moving average. Today probably helped that out a little bit, but honestly, most of the gains today were in Dow. S&P and NQ both actually underperformed. NQ did a little bit better than S&P, which is a change, and that's something we're going to see as more leverage comes in. Is that, you know, RSP, S&P are probably going to underperform NQ, as NQ can move back towards its all-time highs, but S&P is already there. And a little bit of a turnaround on the correlation between cash VIX and VIX. VIX went down hard today, or VX went down really hard today. VIX only down 2.6%, but VX down 9.82. And shorting that forward implied volatility on the contract in front is definitely a leading signal that they intend to short the out of cash VIX. Like, we're going to see cash VIX drive down probably as we approach the VX expiration, right? So it's kind of telling you something. Fed fund futures pricing in 0.31, so 0.1 down from yesterday. Not much change there. Still pricing in 1 rate cut for the rest of the year, which I doubt we see. We did push up a little bit outside of the trend on the top here, but that could still fall back in tomorrow. So I wouldn't say this is invalidated unless we break 58.30 to the upside. If we break out above 58.30, this probably doesn't mean much anymore. Well, it'll just change, right? But like up there. So as long as we don't break out of up there, then this kind of shit can still fail. But not good. Not good to test the top like that. Anyway, thank you guys so much. I will see you bright and early tomorrow. I hope everybody has a great night. Later.